welcome everyone. We're really excited to host you on this Office Hours webinar. I'm Asif. I'm the co-founder of Office Hours here. And our guest today is Michael DeMaria. Welcome.
Thanks. I'm excited to do this. I appreciate you inviting me. And you actually pronounced my last name right. I'm surprised.
Yeah.
So,
famous soccer player too, right?
Yeah. Whenever I was in New York, everybody would ask me that, and I'd joke and say I was his cousin.
Yeah.
And they believed me. And I got a free drink out of him. That was nice.
Oh, amazing. Leverage what you got.
Yeah.
We'll do some quick bios here. I'll just give my bio, your bio, and obviously we'll let you speak for yourself as well. But at Office Hours, we do coaching and recruiting for investment bankers and private equity professionals. So we do this webinar series to help people kind of understand the different pathways into banking and the buy side and career options after the fact. And so we're really excited to host Michael. Michael started his career at Moelis and later worked at another investment bank, worked on the buy side in software investing, and is now actually a startup founder himself. So, I'll let you describe your background and take it from here, and then we can do a little interactive conversation for the next 25, 30 minutes. And we're happy to save some time at the end for questions as well.
Yeah. A little bit about my background. I mean, I feel like a lot of people in finance, their parents were in it or from the Northeast. My dad's a car salesman. I grew up on an island on the coast of North Carolina. So definitely not a lot of bankers where I'm from. And being from North Carolina, I went to Chapel Hill, nice public school, and then after that, went into Moelis, like you'd mentioned, and followed up with that, did like some intense M&A at a small boutique called Union Square. And then lastly moved into Cerent, which is a software-focused private equity firm, and left that to start exploring a startup space, considering everything that's going on in ChatGPT and OpenAI. So that's it.
Yeah, definitely excited to hear about every leg of that journey. So, maybe we start from the beginning. First of all, let me say thank you for joining the webinar as a UNC alumnus. I'm a Duke grad myself, and I can tell you recruiting probably was a lot different from our two respective schools, even though we were just 15 minutes apart. So, I know with a lot of the schools like Duke, we have on-campus recruiting. All of the banks will come as early as your sophomore kind of fall and host events on campus. And you'll kind of get a chance to do coffee chats with, all of the kind of bigger banks and then eventually put your resume in the running. How was recruiting for you as an undergraduate from UNC Chapel Hill into an elite boutique like Moelis?
I mean, it existed. Like there were some opportunities. The difference between Duke, it definitely gets a lot more, but the firms like Centerview or Catalyst or Moelis, they never interviewed at UNC. Only the big like Morgan Stanley's, Goldman's of the world came down. So in order to break into those meetings, I probably emailed every single person at Centerview. And then at Moelis, I just would cold email a bunch of people and I'd fly up to New York or drive up there to try to do meetings in order to get into those discussions. So I'd say, yeah, it's not as easy as Duke, but if you're willing to put in the hustle, you can get an interview anywhere if you're really trying to put in enough work. And that's what it took. I was the only person from UNC who went to Moelis that year. So just gotta have the extra hustle.
That's super impressive. And I feel like, you mentioned your dad was in sales as well. Was that inspirational for you at all? And just for the being fearless and reaching out?
No, I think I'm just kind of born a huge extrovert, I'm I'm already going to look stupid. So just who cares? So just might as well get in front of people and ask what you want. And, if you never ask, you don't forget anything. So you might as well just try. And hopefully 1% of those end up working out. All you need is one yes, right? So, and my dad's great. He works really hard, but I wouldn't really say that's what inspired me to, just run up to New York and try to email a ton of people.
Yeah. All you need is one yes. How many no's did you get? How many people did you email, do you think?
Insane amount. I mean, I think maybe that is what sales teaches you. I've never really officially done sales, but you get so many no's. But I mean, without exaggeration, I probably emailed over 1,000 people, most of them cold, a lot of them were alumni. And then in private equity, we'll talk about later, but a ton of no's in that as well. I mean, you just got to get used to it because it doesn't really matter. If one person says no, it could be for a bad reason. And on top of that, like we said, you only need one yes. So if you get law of large numbers, you do 100 different interviews. If one person will like you. So it's a little bit of luck.
Yeah. And do you feel like, your first conversations, obviously you're still warming up, you're still getting your story down. How long did it take for you to hit your stride where at some point it becomes automatic, right? Like you hop on a networking call, you know exactly how to pitch yourself, you knew exactly what your ask is going to be. How did that process look like for you?
Months. I wouldn't say it was actually that easy. It took a while to really narrow in because I think private equity would actually be a better example of that because, you have your bucks, what you need to know, your deals, you need to know sort of I don't know, maybe having a stock pitch for some reason. Sometimes I got asked that, understand your story. And so and know how to model. So you have all these different departments. Each one needs to be kind of perfect because you're going up against a million people that are also perfect at it. I mean, it got so refined. This is not a joke. I mean, I started wondering, I had my story down and exactly all the questions they might ask. asked, but one area I was like, oh, maybe it's my body language because I kept getting no's. And I was like, maybe there's a way to like improve the way I'm saying things. And
Mm.
so I researched like best speakers in like the world, and I would just watch them talk and try to replicate them. Like one person was Obama, and I remember like literally for hours I was watching his like speeches and then trying to replicate how he said things. And then that's right after that's how I got a job. So maybe it was just the delivery, but yeah,
That's
you can perfect a
incredible.
lot of things. Yeah.
They don't really teach you that in school, go listen to great speakers and figure out what makes them so captivating. That's like good intuition on your part.
I mean, it took a lot of no's to get there. I was like desperate for solutions. I couldn't figure out
Yeah,
what else to change. I was like, everything else seems good. And I was like, well, like a lot of communications is body language and the way you say things. And I think it helped. I mean, I literally did that. So right after I did that's when I got the offer at Sarant. So that could have been the driving factor.
totally. And I think especially as an undergraduate, you don't appreciate that most of communication ends up being nonverbal. It's not what you say, it's how you say it. And, I think it's a bare minimum that you have all the answers prepared to the classic technical questions and, why our investment bank, that's a no brainer. And, they're expecting you to have those answers. But then what makes you get the job is, hey, do you have that extra spark? Are you a really compelling person where we put you in a room, you're 22 years old, we put you in front of the CEO of a Fortune 500 company. We need to make sure you can kind of take care of yourself, right?
And that's a great point. I mean, there's going to be a lot of pressure on you. Like I know I was speaking directly with CEOs and they got to make sure that they leave you two in a room together alone. Like you're not going to say anything dumb. So I guess there's some of that pressure. But I would say this. I mean, I feel like a lot of people underestimate sort of some of these sales tactics, which is like, for one, that's a really big one. We go into these interviews, at the end of the day, you have to answer the questions right, but they also have to like you. And what's everybody's favorite subject? It's themselves. So like, if you go in there and like definitely answer the questions correctly, but for the most part, actually listen more and try to ask them questions to get them talking about themselves. For one, they're asking you less things, but then two, they just naturally start to like you. Like, hey, I really enjoyed that guy or woman because they ended up talking about themselves the entire time. So like, I'd say consider that when you go to these interviews.
Yeah. I've definitely had friends tell me that, I went in there, I figured out this guy played on the tennis team in college, like, my friend had done, and just talked about tennis for 20 minutes and then forgot to ask about financial questions, but ended up getting the offer. This is like towards the final stage. So of course they expect you to have passed all the technicals and all that good stuff by then, but you'd be surprised after you pass the bar on the technicals and the background, it really does come down to fit for the most part.
Yeah, they have to like you. And yeah, just got to ask questions. I mean, like your similar story at UNC, there was a guy I know who was on the basketball team. And like that was basically all he talked about in his technical and like his final interviews was just that. And so he didn't even need to like really worry about the interview. He just wanted to talk about basketball the entire time. So common interests really work well. But yeah, just asking questions of being a likable person.
Awesome. Well, I know you recruited at a lot of different places, and we'll talk about some more of your work experience, and I'm sure more of the fit things will come up. And, time and time again, there'll be examples of, hey, what set you apart to get the job? So, starting in Moelis, obviously elite boutique bank, they are small deal teams, but they work on, huge transactions, like in the billions of dollars range. So you got that experience. And then I know you made a decision to move over to Union Square Advisors. And I know over there, you got to work with more kind of tech startups, growing tech companies. Would love to just dig your brain on, hey, like why leave a platform like Moelis? Why work with these earlier stage companies? And what drove that decision? And, what was your kind of end goal in mind when you made that decision?
Yeah, the framework originally was like one thing. I mean, I'll be completely honest. I mean, I tried going to, the tech group of Goldman. They wouldn't hire me. So like, I'm not going to say like, oh, that was the best bank ever. I did love Union Square. It turned out great. But like, obviously I tried other firms as well. But the catalyst to do it was I wanted to work on software, specifically software M&A. And Moelis is a phenomenal platform, but that's not really their specialty. I think in tech, they do more semis and stuff. But at the time, there wasn't really a lot of software. So I knew that's what I wanted to focus on. It's the industry I wanted to learn the most about. And so I just tried to find firms where I could only get that experience. And Union Square was one. So that was really like the driving force. And I forgot, was the second half of your question around what some of the differences were? Or?
Yeah, well, I think we discussed that your end goal, I think you always had in mind that you wanted to be some kind of entrepreneur.
Yeah.
And I just wanted to, kind of share with our audience that these were very tactful and strategic decisions of, hey, if I want to be an entrepreneur, I should probably be doing software M&A because I want to start a software company. And so probably out of Moelis, you got a lot of things, right? You got a great work ethic. You got exposure to a lot of high profile transactions. And then you realize, wait, what am I missing? Because being a banker and being an entrepreneur are completely different things. So, I'm just more curious, you made this active decision to move into software. And how did that kind of help you on your path to being an entrepreneur?
Definitely. I mean, you said being a banker and an entrepreneur are two different things. They're also the antithesis of each other. Like going into banking almost discourages you because of the golden handcuffs. So like, yeah, they're pretty polar opposites. Yeah, it's exactly right. I forgot I had mentioned that. There was sort of like a set path that I was trying to accomplish, which started when I was 20. So I read about Steve Jobs. Everybody did. It's kind of cheesy, but really won me over. I was like, that's what I want to do. I want to be an entrepreneur. And then from that book, you realize like, okay, there are business models that are better than others. Like I can run a gas station in my local neighborhood, which is kind of what I thought I was going to do in high school, just run a small business. But then you read about Apple and these startups in Silicon Valley and you realize like distribution is so much easier in software. It's much easier to build a business. So I was like, okay, I'm going to be a startup founder. Software is the way to go. And so that's exactly right. That's why I sort of created a plan. At Moelis, didn't get software, but I felt it was really important to understand how software works with the companies in the space, how they're built, how the margins work, like how you actually build those businesses. And being able to do M&A and private equity specifically in that industry allows you to learn a lot about how those companies get started and how they work and how they're run, which is a huge leg up when you actually start a company. I think it's not massive, but it definitely helps. So that was, you're right. It was sort of the end goal of trying to eventually do something as a founder.
Yeah, I think I had similar goals in mind. A lot of people want to start businesses, be more entrepreneurial. A lot of people don't know what they want to do. And for them, I honestly have the same perspective as this was my path. I think banking is a phenomenal place to start your career. It is nothing like entrepreneurship, but it proves that you work hard, you have a high pain tolerance, which you absolutely need a high pain tolerance for entrepreneurship.
You don't sleep.
I don't think I slept much in those analyst days, but
it was weight too.
Yeah, I gained a little bit of weight for sure. Not to glorify it. It is what it is, right? It's a 2-year boot camp. And, you're signing up a contract to say, hey, like, I'm going to get paid 6 figures as a 21, 22-year-old out of college. I'm going to see like huge M&A transactions. And in banking, you see a high volume of transactions. You're not just focused on one company or one thing. Like you kind of have a great pulse on the market. So you're seeing what everyone's doing. I think it's honestly a cheat code to work in banking. And I think, if you're interested in the business world, at least, it's not a bad way to go. Like you learn a ton.
I totally agree with you. I mean, I feel like, just kind of speaking how you went into banking, how you ended up here. Hopefully you've done one of these interviews before because, you and I have talked and your story is incredible. So hopefully you've shared that with people. But as far as banking, yeah, it's the best step. If you don't know what you want to do, like you might as well just challenge yourself and find an industry where you can learn as much as you can in a short amount of time. And you definitely get hit in the face a lot with a lot of different things, like not knowing how to do the work or maybe dealing with a difficult personality can occur. So it's a sort of a great training ground to just take that and do whatever you want after, because it'll probably be, at least in some way, quite a bit easier. Like everybody talks about how hard it is to be a founder. You have to sacrifice so many things. And then I met a lot of people who are founders and they told me they only work like 60 hours a week. And I'm like, well, that sounds pretty nice.
Yeah.
Not a lot of industries. Yeah, go ahead.
No, I was saying, in banking, you can unplug at some point when you're done with the deal or you go home. Like you can have personal time. I think the difference with being a founder is like, I'd be curious what founders working 60 hours a week, because it's literally like, if you don't earn revenue, you can't put food on the table. It really is do or die as a founder. And like, at least for me, I was always thinking about my business at all times.
Yeah, that's right. Kind of makes you question your sanity a little bit, but there's ways to kind of make up for like not having a ton of revenue. I'll throw it out there. I'm 31 and I chose to live with my parents to save money on rent.
Yeah.
And so, yeah, you got like an example of sacrifice you got to make if you really want to do this. There are different things you have to sacrifice that are different than banking, but you're right. They're hard in a different way.
Yeah. I think COVID was interesting too, right? A lot of people moved back with their parents and a lot of people ended up liking it and saying, hey, like, this is pretty nice. I don't have to pay rent. A lot of people are, doing hybrid with their parents too. Like, no harm in it.
There's some harm.
There's some harm.
It could be not always like the easiest thing with your folks. I guess it depends on your parents. My dad's he's a strong personality. I'll just say that. And so, it can bump heads a little or like ram horns, whatever you say that old saying. But it's good. I'm saving money on rent, and overall it is nice. I think people did learn in COVID. It's you get to see your parents. Speaking of COVID, you get to. I think it was a great like eye opener is that you don't have unlimited time. At some point you want to be able to spend more time with your family. So I think COVID working remote was a big like wake up for me after spending so much time away in banking, private equity, not seeing anyone, and then having COVID occur allows you to see your family members, see your friends. And so I think that was a big wake up call for me and a lot of my friends about trying to not sacrifice everything for your career.
Totally. Shows you what's important. I would say this, like my takeaway from your anecdote here is that you just got to do whatever it takes, with your end goal in mind. And if that means sacrificing 2 years of your professional career in like banking and just working, your ass off, basically, do it. If that means, taking sacrifices on your lifestyle so that you can make your 10-year goals achievable, do it. But, nothing in life that's worth doing is going to come easy.
100%. I mean, if you're one of those people that really wants to do something amazing, which I haven't yet, I'm not saying I've done anything that great, but I am a person with long-term goals I want to accomplish. And for anyone who kind of has that same mindset and mentality of like, what do I want to get done by the time I'm 30, 40, 50, it's going to take some sacrifices and a lot of hard work and consistency. And so, you got to kind of make that choice. I think Kobe Bryant's a person who talks about that a lot, of like understanding what you need to sacrifice and the work you got to put in. Mm-hmm. But if that's what you want to do in life, just got to buck up and realize that like some things are going to have to go down in order to make up for the time you're going to be spending working or trying to achieve your goal. So, I mean, I'm sure starting office hours was a very difficult process, and there was a lot of like late nights and a lot of concerns, but it makes it all worth it in the end, right? I mean, happy with it now. Yeah,
absolutely. Exactly. You got to do what makes you happy. So
for the most part, 100%. Yeah. Or at least sacrifice happiness for a little while, hoping that long term you'll get there. I mean, I don't think anyone was super happy going into banking at first, but there's a trade-off you get by sacrificing that short-term happiness. So
yeah, and Kobe's a great example. If anyone ever needs any inspiration, just look up Mamba Mentality Kobe podcast on YouTube, and you'll be inspired. I play a lot of tennis. I never played basketball, but when Djokovic won the US Open this year, he literally had a Kobe t-shirt on. And during his post interview, this is like his 24th Grand Slam, so he set the world record for Grand Slams for men's tennis. Said Kobe was always an inspiration. And when I was going through this time, like I used to text him and he used to call me and calm me down and say, you got this, like it's all good. Like imagine having that direct pipeline to Kobe for motivation.
That sounds intimidating. I mean, the guy didn't stop, and you see all the stuff at 4:30 a.m. He's out there trying to practice, and he's like, text messaging like Oprah or Jordan at like 2 a.m. in the morning. He just like didn't sleep. Like, I don't know. I would love to have him on like pipeline when he was around, but Jesus, like that's a lot to live up to.
Yeah. You don't want to disappoint him.
Djokovic was wearing a Kobe shirt? That's impressive.
Yeah. Okay. He was wearing like a jacket that said 24, and then he took off the jacket and it was just like all pictures of Kobe and Mamba mentality.
That really says something. Yeah. That guy was, I will say he was pretty inspiring through like banking and college, trying to like use them. I feel like everybody loves like David Goggins now, and I don't know, I forgot these other people, but these like hustle porn kind of guys. But Kobe is like he's the OG. I think he's the best one.
I literally have this book.
No,
it's not a bad book.
Is it? You like it?
Yeah, it's good. You should. It's worth a shot. You should read it.
Every time I see him come up on YouTube or something, I just cringe a little bit. Like, I'm not saying he's not impressive. It's just like, it's a little, he's always like got his shirt off and he's always running somewhere. Like, it's just a lot.
Yeah. That guy has willpower. Believe me.
I believe you. I just, it's personality type. So I'm a big Kobe guy.
Totally. So, little tangent there on the sports metaphors, but, I think there's a lot of analogies to working in finance and grinding and whatnot. So, we talked about the experience at Moelis. We talked about moving over to Union Square for software M&A. Let's talk about private equity, because getting a banking job is hard enough. We've run the numbers here. Like getting a private equity job is much harder. There's just much less roles available, and the talent pool is incredibly competitive. Like if you made it into banking, you're already driven in a certain type of way. And then only a subset of those people break into private equity. And, according to our data, there's about like 18 to 20,000 investment banking analysts in the US at any given time, but there's only 6,000 or so private equity associates. So there's a large drop off. And from associate to VP to principal, it only gets smaller and smaller because the org structure is like a pyramid. So, people will start leaving the industry at some point or another, for sure. So how was recruiting for private equity, and how'd you end up at Cerent?
Terrible. Just the worst. Yeah. So like hopefully anyone, hears this story and uses it as a motivating factor. Like Union Square is a phenomenal firm. Like I really enjoyed my experience there, and I think everyone there is great. But, you have these gatekeepers, recruiters, right? And they sort of dictate, who they get to, who the nice big, like, Blackstones or the KKRs get to interview. And if you go to a smaller firm that doesn't have a lot of recognition, that could be a lot more difficult. And so that was working against me. And then on top of that, I was a little bit older. I wanted to stay in banking for a while. Like I never heard of private equity until I started working at Moelis to begin with. I didn't have that like 2+2+2 plan that all the Wharton kids or maybe the Duke guys did. So I found about it late. And so I didn't start recruiting until like year 4 into my banking extent. And so I remember going to interviews. It was even hard to get because now I don't work at a big name brand firm. But second, they're like, aren't you a little old for this? Like, granted, I was like 26, but they're like, oh, like, they're interviewing people that are 22. They're like, aren't you going to burn out? I'm like, how old do you think I am? So there was definitely a lot of difficulty even trying to get my foot in the door. And then on top of that, if you're on cycle recruiting, there's a lot of spots, even though there's not as many as banking, but there are a lot of spots all at once on cycle. Mm-hmm. For me, if you're not going to those name brand firms, you don't really get on cycle as much. So everything that I do is off cycle recruiting, and you're fighting for like one spot against a ton of candidates. And so to sum all that up, like it was incredibly difficult. And the only thing that allowed it to work was just consistency. I mean, I think it's a principle of life of just keep doing it. And eventually you will get there. You won't fail if you just don't stop trying. So an impressive stat, which it's not impressive, it's probably terrible, but like I did 10 super days. 10.
Wow.
Like that's twice as many as anybody else I even know of. But I got this, I was in TA Associate Super Day at the NICE office in Boston, and Evergreen Capital Management, which is Elliott's, the hedge funds, like private equity firm. I did a bunch of others. I went to 10. So I don't know if that means I'm really good because I was able to get into 10 different super days, or I'm terrible because I had to go to 10. Like, why didn't I get the first 9?
Yeah.
But that's how many it took for me to finally get the job at Cerent, and it paid off. Cerent was actually the best firm I could have gone to. So I just say all that. So like, if you're going to PE, it's really tough, but you only need one yes, and if you just stay with it, eventually you'll get there.
Yeah. And, getting to the super day means you already passed the modeling test. You probably passed the case study. You probably talked to like 3 or 4 people at the firm already. So do you think those super day conversions, was it largely due to fit, or were there other things at play? And the point I'm trying to illustrate here is that at this stage of the game, you could have everything right, like, and all the competency down, but you have to find the right firm for you. And it's a two-way street here. You don't want to be at a firm where the culture doesn't vibe with your personality, because you're going to be set up for failure. So do you think it took like 10 shots on goal to find a firm where you found, the partners and the leadership where you're like, wow, I really kind of similar background, similar personality, or I want to dig more into like the 10 reps here?
Yeah, it's a good question, actually. I mean, you're right. In order to get to the super day, I had to hold like 5 years before that and do the modeling test and do case studies. So like you already passed a lot of technical. Maybe I wasn't that likable. I'm not. That is a good question.
I find that hard to believe, Michael. But
there's definitely a little bit of a fit, right? Like I definitely don't feel like I'm a typical PE guy. I'm pretty like extroverted and loud, and I guess they're all like extroverted, but I don't know. I'm not your typical like guy.
You're not just buttoned up.
Yeah, I don't know. I mean, like whenever people found I was like a finance bro, like, banking, private equity, it seems like a lot of people were like, I really didn't expect you to be that guy. I met a lot of them. And so like, I think that's part of it. Maybe it just wasn't your typical mold. So there is like a fit question. And I will say, like, my buddies worked at KKR or Vista Equity Partners, had a much different experience than I did at Cerent. Cerent was a phenomenal culture. So like, it was really a good fit for who I am. So that is part of it. But the last one again is like, I think it's the delivery. I was so nervous in the interviews. And so listening to all those speeches with Obama allowed me to really slow down my speech and like think about my delivery. And I like I said, that was what I did right before my 10th interview. And I think that could have made the differentiating factor.
Mm-hmm, mm-hmm. Totally. And, can you tell us more about the experience at Cerent? How did your PE job kind of differ from the banking job? And just maybe a brief overview for those who don't know Cerent, or, what type of PE they do.
Yeah, I think, everyone's really concentrated in PE to try to get to like the biggest firm possible. And I get why. Like, there's more like, the name brand is there. But I will say, because I went to Cerent, I had a better experience than most of my peers I know went to like some of these larger firms. I mean, Cerent's not that small. We raised 1.1 billion recently, but it's not the 20 billion that you see Thoma Bravo was raising. And that experience was great. I mean, the culture was a phenomenal fit for who I was, but I really feel like you get to know your team pretty well at these smaller, at the smaller firms. So as far as the experience and how it compared to banking, like, I'm sure you know this, like you have to double click a lot more. I mean, you're on the line when you're actually putting capital dollars to work on behalf of your LPs, whereas in banking, you just kind of sell the business and you're done with it. But in private equity, you're stuck with it for a long time. So like the rigor of the analysis you have to do is much more intense. So you really have to break things apart in a much more intense way than you did inside of banking, and then present that to people that are really intelligent, the investment partners, making sure you don't sound too stupid and be able to like actually articulate what makes it a good business or not. So I'd say the main difference is just really digging into the business itself. And then again, just like the smaller firms like Cerent are just, I feel like you get a better experience being able to speak. Like for example, David Kennedy, he's a partner. He's a mentor of mine. I don't know if that was at KKR, if I'd ever really get to have any one-on-one time with the partners, but I got to speak to him as much as I wanted. So I feel like having those smaller firms allow you to have like a better experience with your team. I'm going to stop there. I feel like I'm, going on a little bit too long about it.
No, I think, all your points are super valid. For one thing, in banking, you're an advisor role. So you tell a lot of companies what to do and you kind of execute on the transaction and then you walk away from it. So you're not stuck with the business that you've bought or sold. You don't really follow day to day. You don't really know what happens to the business. But in PE, you're putting money where your mouth is. You're an owner of the company. And for that reason, you have to be extremely diligent about the outcome of the company because there's capital dollars to work. It's the GP money, it's the LP money. And, you have to target this 2 to 3x return over a 5 to 7 year period. So, you have to be a lot more thoughtful with your questions. You have to actually get to a right answer, not just, oh, this could be right, but, we're not responsible for if it's right or not. But, for that reason, it is a lot more rigorous and it's like drinking from the fire hose because a lot of that you can't really read about. It's investing is an apprenticeship job. So you have to learn how to be an investor. You have to learn the right questions to ask. And you're responsible for learning more about an industry than the founders or operators in an industry really quickly. So what does that mean? You have to consume a lot of information. You have to know how to do research. But I think most importantly, like if you can ask 10 or 20 questions, you have to ask the right questions to find out the most you can about the industry. So those are the skill sets I learned in investing.
I mean, I'm sure in investment committee, you also had to present to the, the investment partners, right? Did you have to do that as well at your firm? Yeah. So not only did you, then you have to know it so well that these are really intelligent people, the partners at Cerent, and they're going to grill you on it. So it just looks pretty bad if you don't know what you're talking about.
Totally. Yeah. You want to get caught during the headlights. You look really bad.
Yeah, which has happened, to me, but you want to try to avoid that as much as possible.
Yeah. And you mentioned, having access to the founders or the partners of your firm. I think that's also pretty rare. Like I imagine if you're, a mega cap fund, you're not talking to the CEO every day. Like, people aren't going to Steve Schwartzman and having a conversation necessarily all the time, but it sounds like you were able to do that with your firm.
Yeah. I mean, I could literally just ask them for a time to grab coffee. And I think that made a big difference. You mentioned the apprenticeship model, but I feel like the KKR, maybe you get that experience. I can't say I wasn't there, but it didn't sound like it. Where, at Cerent and some of these smaller firms, it's not a big team. And so they actually are willing to take the time to be with you. Or that could have been a culture thing. That's why I think Cerent was a great fit. And I'd recommend it to anyone who's watching. Yeah.
There's pros and cons to both approaches. Some people like the leaner teams and talking to everyone higher up. Some people like these massive organizations because they like the complexity of those bigger transactions, but they understand that there's more layers between you and the top. So it's just a personal preference, really. You can't, you have to decide for yourself what you like.
100%. We'll also think about the relationship with the portfolio companies. I was actually a board observer at these businesses and I don't know. Yeah, I got to really meet the CEOs and some of them offered me jobs when I left Cerent. And I don't feel like you can get that at a bigger firm because the orgs are so big, they're smaller companies. And I would actually talk to them, the management team all the time. So that's another little facet of going to these smaller firms that I really enjoyed.
Oh, I loved working with the management teams at smaller firms for sure. We had that one-on-one relationship with the CEO, CFO and whatnot. And, similarly, they were like, hey, after this gig, you should come work with us. But, it's definitely great to have those opportunities.
Yeah, and you get to go to the quarterly board meetings and the CEOs, CFOs, COOs of these companies, they're intelligent individuals and you get to actually listen to them during these board discussions. And I don't know, I thought that was a great experience to kind of learn not just how to invest, but how to operate a business. I took a lot away from that. So I definitely would hope other people have a chance to do that in private equity, because if you don't, you're only seeing the investment side instead of also learning, what happens after you buy it and actually being involved in the business.
Yeah. I would recommend for anyone who wants to be an entrepreneur or operator, if you go more towards the middle market, lower middle market, the closer you get to founder, owner, operated businesses, the more access you'll have to them. Versus if you're doing a buyout on a public company, take private, there's no chance that you're on the board because it's a public company, or there's no chance you're getting insight into how the CEO's thinking all the time. No way.
Definitely not. I mean, my buddy at Premier, it didn't seem like he had as much exposure as I did, but I'm sure they have their own, I'm sure those bigger firms have a lot of pluses too in different ways. So not trying to knock them. Both are great.
Not at all. Not at all. You want to learn about more financial engineering. You want to learn about these massive industry consolidations, go to a bigger firm. Absolutely.
100%.
Well, awesome. We've been chatting for more than half an hour here. I want to make sure that everyone in the audience has a chance to ask questions. So feel free to drop in the chat. There's a Q&A feature here. Feel free to drop questions. We'll see them and happy to address them. In the meantime, while people are asking questions if they're curious, happy to kind of chat about your jump from finance into entrepreneurship world. That was a super scary jump for me, especially for me when I started the business during COVID. Walk with your headspace. What was it like when you got the conviction to take the leap?
Well, I got to know, what convinced you finally to do it? I mean, you had a great career going as well. So what was the final, was there one particular factor that made you do it, or was it several accumulating factors?
I think it was several things. The idea I had for a while before I took the leap, and some people will say, "Oh, when you have an idea, just quit your job and like go do it." I think that's pretty dumb. I wouldn't do
That's a
that.
horrible idea.
There's no reason to do that if you're getting a paycheck. So find many ways to experiment with your ideas first and see if this is like something that you can get behind. So like, I was even calling up buddies and being like, hey, like, would you mind talking to one of these guys? We got an inbound interest because we were just like emailing people, right? We created a database through like our own methods of like all the bankers out there, and we started emailing people, hey, like, are you trying to break into PE? Are you trying to get into finance? Like, do you want to have a conversation with someone who worked at, a $10 billion tech fund? Do you want to have conversation with someone at Moelis? And like, of course, people were like hopping on the phone and doing that stuff. And, we got a question here we can address too, by the way, from the audience.
Sure.
Could you deep dive into how PE has helped you in entrepreneurship? Thanks. So, kind of related to what we're talking about. It's like PE allows you to kind of set up these like mini ROIs or KPIs of, hey, like, how do we hit this? And, if we gain conviction on hitting this metric, then, eventually you get the confidence to take the leap. But, I would love to hear your perspective on how PE helped you be an entrepreneur.
Well, one thing that's kind of maybe a little too far forward thinking, but is like sort of the business models. If you look at, for example, an Amazon versus a Costco or versus like a Walmart and then versus like a software company, I think being inside of PE, you really have to have a deeper understanding of how business models work and be able to think about that, what's going to do going forward. And so I think that's actually pretty helpful when you're thinking through like startup ideas and understanding, okay, like how's the distribution going to look for this product? Like who would I be selling it to? And what sort of the business model it is. I think having done that so many times in private equity, it allows you to kind of break apart the business idea and how it'll look going years into the future. And then the second thing, I mean, I think it might be because I worked at Cerent, being as a board observer at a lot of the companies, like you get to actually speak with the CEOs and COOs and CFOs, and you sort of understand how to operate the business, both on a granular level and at a management level, just seeing how they actually just operate the company. And you learn a few things from it. Like I remember specifically one of the CEOs that I worked with, they had to cut costs after COVID. They had amazing growth actually during COVID. Then they it started like stifling off. And so he was having a hard time trying to figure out who to let go and how to manage the business as it was shrinking a little bit, doing phenomenally well. It grew too much during COVID, sort of, wasn't sustainable. And he'd said something as like, oh, I am not like a restructuring CEO. I'm a growth CEO. I don't really know how to do this. And I'm like, oh, wow, like that's such an interesting like little data point. I didn't really think about that before, but it's little things like that where you're just speaking with these individuals and seeing how they discuss the problems that they're facing with their business and how they're hiring and how they're selling allows you just kind of get that like in-depth business experience. And it's also like a wider observation. If you only worked at Facebook, only one company, you kind of get a once like sector of area to learn, where I feel like in private equity, because you're buying so many different businesses and working with so many, you kind of get a wider diversity of like the business in aggregate. Yeah, so I'm going to stop there. Overall, by the way, I'm not saying it's the best path to go into like being a founder. If you're an engineer, I'd actually almost recommend that because you can actually build the product. Or going to an early stage startup might actually be a better experience to actually create a company. I mean, what do you think? I think I would probably learn more at a startup to start a company than I did in private equity, but it also wasn't the worst path. But you started a company, don't you think it would have been easier? Well, actually, you started a company in like finance and banking PE, so I don't know if you could have done it otherwise.
There's a crossover here for sure. So yeah, I think for this business, my path was the right one. But we graduated back in 2015. Like the startup environment was a lot different back then. I think finance definitely was still more in vogue than not, and there was more opportunities there. The startup environment now is nothing like it was 10 years ago. Like it's completely changed. There's so much more capital available. There's so many more venture funding. There's so many more like popularity of incubators versus then. So, right now, if someone wanted to start a startup, I'd recommend just go do it. But like, make sure you have a good reason of why you're doing it. Like you need to have learned insight that no one else has in the space. Like, why are you going to win this when no one else can? A lot of people, they learn very quickly and they're able to just kind of take that risk and do it. Other people want more structure and they would benefit from like working in corporate in some way, shape or form, whether that's at like a big FAANG company or another startup, but just getting some structure before doing their own thing is not a bad thing for a lot of people. But if you have conviction and you have learned insights and you know something no one else does, I say just go do it.
100%. I mean, you were really intelligent saying like, should you quit your job because you have this great idea? And the answer you said was no. And like, that's actually true. Do not quit your job. Like there's so many ways to try to start your company and test it out before you actually like quit everything and drop to go do it. I mean, when I was at Cerent, I was testing like ideas and distracted from my work at times, but I didn't have to quit my job. I just had to like put in extra effort, and you don't need to quit everything just to start a company. So if you have an idea, yeah, just find simple, minimum viable product ways to test out your idea.
Totally. Many experiments for sure. And like, there's 24 hours in a day. You have time. There's time. You can do it.
Yeah, exactly. You can sacrifice sleep at the weekends, relationships, like I was single for a long time. So yeah,
There you go.
Yeah.
There you go. We have a few more questions for sure we can address from the audience. Devin's asking, after you left Saren Capital, what happened to your relationships with the businesses in which you were involved? And are you engaged with those businesses from Saren in any way?
Yes. I mean, but I don't know if that's like normal. I genuinely appreciate like strong relationships with friends or like people I meet. I'm always like the weird person who'd like cold email individuals just to learn, like Orlando Bravo. Like I got to meet with him just because I wanted to learn about his background. So like for me, just sustaining relationships and trying to just be a friend. So like I don't know if that's super normal for me. Like yeah, I still email them. I hold like a catch-up call to hear how everything is going and try to like maintain those relationships. Definitely, even at Saren, like I was texting the partner literally yesterday just because we stay in touch. So, but it could depend on the firm. My firm was really full of a lot of nice men and women. So like I liked still talking with everyone.
Yeah, I think me and like everyone in this audience or anyone who watches this could learn a lot from you about maintaining and developing relationships. I think that's not something that comes naturally to people, but just showing that interest, staying engaged, following up, like you can, I think, learn how to do that. If it doesn't come naturally, you can make an active choice to say, I'm going to hold like monthly catch ups with somebody that I want to maintain a relationship with, or, I'm going to make sure that I remember things about them. And, we continue this very natural and organic relationship. It's just that we're adding some structure to keeping it alive.
100%. It pays dividends. I mean, it's not like you should be doing it for an outcome involved, but I remember like I was sort of mentored a friend of mine in college. And if I didn't like help him out in school, he was actually the one that forwarded me the job opportunity at Moelis. Like that wouldn't even occurred. So like there's good outcomes, but you're right. You should maintain the relationships just because like, I don't know, take a genuine interest in people, like be inquisitive. I think people are really interesting and they have interesting stories, and figuring out what motivates them and why they made the choices they did. You can learn a lot from it. And then, like you said, setting time aside, like I put everybody's calendar or everybody's birthday in my calendar. And then every other Thursday, I actually block out like 2 hours to catch up with friends. Like I literally block off my calendar to do it. So yeah, just got to put the investment in, but it pays off. Like not a lot of people I can talk to and ask for help.
Man, after I stopped using Facebook, the birthdays started getting challenging. So
I started calendar, man.
I do for my closest. I do for my closest, but I should, just in perpetuity. This is the birthday, just have it there. It's easy.
That's exactly
it's one extra step. Yeah.
That's exactly. I have like 4 reminders for like, one at like 9 a.m., another at 11. It just lets me know like, hey, don't forget to like message this person. And it means a lot. Like you'd be surprised. Like they'll, a lot of people don't really think about that. Even like their parents will forget sometimes. I've had that happen. So it's a small thing to do that really makes people feel good.
Birthdays are so important for sure. For sure. We have one more question so far, and anyone else in the audience, feel free to ask a question while you have us. We'll do it for another 5 minutes or so. I think we're going to cut off at 12:45, but happy to answer any questions that come up. Someone asked, for someone who's worked in PE, how do sponsors view IB analysts looking to break in from product groups rather than coverage groups? So I think we kind of touched on this when you move from Moelis into like more tech coverage. So, we can review the question if you have anything else to add, but domain expertise versus product expertise.
Well, I mean, I don't know. I think you can do like capital raising, right? In banking products, call it the IPO people. Like if that's kind of the question, people in those groups, I will say they have a much harder time getting in private equity. Like product you need to know is mergers and acquisitions because that's the work you will do. So like that definitely makes a difference. So get into an M&A group. Then as far as like getting a broad expertise, like at Moelis, you're generalist versus like getting specialized. I don't think one actually helps you getting a PE more broadly, but if you do want to do like software PE and you don't have like that industry experience, I do think it's a lot harder. Like they ask a lot of in-depth questions that I was able to answer because I'd done so many deals. So like it only matters in the sense of like, if you want to work in PE in a specific industry, you should probably make sure you're at least doing some deal work in banking in that industry to make sure you can answer their questions. And it sounds like you know what you're talking about. So yeah, but if it's a generalist PE firm, then they don't care either. Just do the deals. I don't think it makes that big of a difference, but it can help.
Yeah. And obviously, it's also bank dependent on, you don't want to be in an M&A group and your bank does no M&A. You don't want to be in a tech group at your bank if they don't do tech deals. So my advice is always be at the strongest group possible at your bank and then figure it out from there. You want more transaction experience than not.
Yeah, and also don't like underestimate the power of the partners that are in that bank. Like some of the guys at Union Square like actually stuck their neck out and like reached out to folks in their network to get me into interviews I didn't belong in. So if you're in the right group and those people are like have strong connections at PE, that could also be an ability to get your foot in the door.
Yeah. Anyone can be an asset to you, so don't treat anyone too lightly.
Yeah, and like I said, just take an interest in people. Like the partners at Union Square, I would try to have coffee with them and chat. And then when I finally asked them for help, like introductions to get into PD, they did it. Just do good work, and people will help you out with that. So don't just rely on recruiters. Talk to people that can help.
Totally. Got another question, same vein. If you're in a different coverage group than software, but you want to get into software PE, how can you learn the answers to those particular software cues? I can take this one actually. So I came from industrials investment banking, and then I worked in the lower middle market industrials PE. And then I had this insight where, hey, I want to be like a tech founder of some sort down the line. I should probably learn more about tech. So similar line of thinking to you, Michael. So I probably interviewed at like 40 tech firms, like all the big ones, and also like Google's M&A team and like, all these tech companies, because I didn't know what I wanted. I just knew I needed to learn more about tech. Here's where like relationships came into play. My friend was a tech banker at a top tech group, top bank. Was definitely on the phone with him for like 4 hours learning about tech. In the meantime, I did all I could to read industry primers, read research reports, and like make my own models on these. And like definitely the repetitions helped. Like the first 5 interviews, I definitely fell flat on my face when it came to tech questions, like specific cohort analyses or ARR or like KPIs for like LTV to CAC. Like we didn't do any of that in industrials at all. And I'm sure you lived and breathed that every day as a tech banker. But then eventually it just clicks, right? And then you start to develop more of a view on the companies, on the industry. You have specific companies in mind that you're really a fan of. So I think you can be very methodical about it. You can do a lot of research online. We have some resources on office hours for tech specific modeling, precisely because I had such an issue kind of moving over from industrials into tech. But it's definitely possible if you can demonstrate that you have that kind of knowledge and insight, and you've taken the extra steps on the back end to learn about it. But I don't know if you have anything to add to that. Yeah.
I mean, you're pretty much right. I mean, just like do a little research on Google. Like there's enough information. I'd say the only other thing I would add that I found really like helpful was like a lot of hedge funds will cover software. Like if you ever heard of Value Investors Club, I think Gotham Capital Guy made it, and people post like their investment research. And it's not just software specific. There's a ton of them. But if you go back and read investment case studies, either at hedge funds or pretty much just hedge funds, and understand like if they're pitching a software company, why did they say it was good and what were the cons? But being able to like actually understand why they said those things. So like every time you have a question, go back and Google it. But I think if you actually go through those investment memos, it'll really help you like kind of think about things from the investment side, like a private equity person would. And I think that'll give you a little bit of leg up if you're actually going through those investment memos as well.
It's a great recommendation. Like read other investment memos, and Value Investors Club is huge. Like everyone who is like trying to work at a hedge fund tends to go through that and write up reports to try to get into that club, right?
So 100%. Yeah. You did this? Like, you know what this is? A lot of people don't.
I know what it is. I have a friend from college who got into it before he moved into hedge fund world, but I was never interested in hedge funds personally.
Yeah, they've lost a lot of their like fame. I feel like back, like they were the biggest, coolest thing to get into. I think until like 2010, and then like obviously returns, or 2008, I'd say the returns went down, and now private equity is sort of the cool space. It all depends on like where you're generating alpha, I guess. Like that's who's paying the most money.
I just think on average, private equity is like a better performing asset class, and hedge funds are so competitive, right? You're competing on all the same public information everyone else has, and so are you as a retail investor really going to beat Citadel that has like billions of dollars of resources on like alternative data acquisition and hiring the smartest people and analyzing your golf swing? Like you're probably not, unless, these situations like GameStop and Reddit happen. And like, that was a really fun life kind of case study here. But on average, hedge funds are extremely competitive. I don't think any upstart hedge funds are really going to beat the established players that have all this access to data, and like returns are going down. There's more competition driving the same amount of returns. So it's just like, if you're really smart, amazing, like you're at the right fund, you can make millions of dollars in your 20s, which is amazing as like being in finance. But private equity is just so special because you have privileged access to private information, and you're competing in these like smaller closed off auction processes. And then you don't have to report your financials to anybody. Like it's privately held for 5 to 7 years. So you're not under the short-term pressure to like beat your quarter or anything. You can invest in long-term growth. So like for me and my personality, like private equity is by far the best asset class that you could be in, you know.
100%. I mean, just think about it just from like an economics point of view, right? I mean, if you're like financial, whole point of financial markets is to drive away like margin, and like you're going to have perfect competition. And what's like the best like market for, buying and selling businesses? It's definitely the stock market. What does that do? Now you have a million eyeballs all looking at the same assets. So your competition's gone up. I mean, these securities are priced near perfect, not completely, but near perfect. Whereas in private equity, there's only a few people going after those assets. Like an investment bank can show it around, but maybe have like five or six firms chasing after one asset versus hundreds or thousands of people inside of hedge funds. It just makes a big difference. And so there's just a larger window to actually make money. So I do think private equity as an asset class is a better place to actually learn from and to continue to pursue.
Mhm.
I mean, just yeah, it's much more easier to make returns. And besides, hedge funds, I feel like they've all gotten really short term. You've seen this, like they're all pod shops now, like Point72, the Citadel, like that's sort of like there's very few fundamental long short firms like there used to be. And
Yeah.
I think the big reason why they win is exactly what you said. Like they have access to a lot of data that like you just can't do with these smaller companies. Like Point72, one Union Square guy actually went there, and I talked to him. Yeah, it's they're all like 3-month hold periods, 2-month hold periods, and it's changed a lot over the years. I'm getting on a tangent, but yeah, I would overall recommend private equity.
Yeah, they're kind of trading ball and they're cashing out when they can. The rate of change in the world is just accelerating so much too. You know, as you mentioned earlier in this interview with OpenAI and ChatGPT, like you don't really know. It's really hard to underwrite a 20-year kind of discount rate, let alone like a 5 to 10-year discount rate. You don't really know where the world's headed. So when you can make the money, these hedge funds capitalize.
That's exactly right. Yeah, I mean, you're interested. You're not going to try to do that now. I feel like so many PE guys go into the hedge fund world. That's not going to be you.
Now I can confidently say I'm not going to work at a hedge fund. Yeah.
Yeah. Well, it's not as sexy as it used to be, but yeah, I totally agree with you.
I know my areas of expertise, and I'm not going to compete with my friends at hedge funds. You know, I have different skills. They have different skills.
Mind if I ask, what is like your main expertise? Like, where do you feel like your special sauce is?
Yeah, I love being like an investor operator. I love like evaluating businesses, looking at markets and being super strategic, but then, take it a step further from investing, go and do it, like roll up your sleeves and do it. I love the day-to-day blocking and tackling. I love working with a ton of people and like working in teams and getting stuff done. I think hedge fund tends to be a little more of like a solo and like more isolated job. I think like you're alone with your thoughts a lot and you're being paid for the quality of your thoughts and your ideas. So you're just sitting there thinking all the time and then executing in a very high-paced environment, just like making sure your trades execute at the right time, at the right price. You're thinking on like basis points of returns and like being very quantitative about it, which is great. Like it's a fun exercise, but like I like the people-oriented nature of working in like a business versus like the solo nature of a hedge fund.
That was actually the biggest reason why I went into private equity, because you're working in teams. You can speak with people a lot more, or like the companies you're trying to buy, you actually talk to them. Whereas in hedge funds, like during the earnings call, but it doesn't really go much beyond that. So I totally agree. We're similar in that way.
Totally. Well, we're approaching the top of the hour here. I know that you asked me that we wanted to cover one specific topic about advice to this future generation of aspiring finance professionals going forward. We covered a lot in this conversation. Is there anything else you want to add regarding, advice to our audience or anyone listening in?
Yeah. The only piece I'd mention is, I feel like everybody goes into banking private equity for the wrong reasons. So like, it's just like a really clear cut and easy path to identify, right? Like the industry puts forward something and packages it like 2 + 2, 2, which is, go into banking, go into private equity, then go to business school. But just because someone like gives you a path to continue to progress now doesn't really mean that that's necessarily the right path for you. So you should actually be really careful what people offer you. Not saying it's wrong, but like what advice I would give is take a step back and like determine if this is actually something you enjoy doing and would like to pursue. Like for me, when I went into it, it was, yes, I did have a long-term goal of being a founder, but at the time, I didn't do it for money. Like there was not the incentive. It was just because of what I found as most interesting. And I think that made the journey so much easier when you're going to like 12 or 1 o'clock in the morning, was actually genuinely enjoying it. So all I would say is take a step back, process your thoughts, and really consider if it's something you want to do or if it's just something the world's telling you to do, and then take it from there.
Totally. I think it was a very, very awesome way to say follow your dreams in a non-cheesy way. But like, I think it's super valid advice. A lot of people end up being golden handcuffed or doing jobs they don't like and being super unhappy about it. And like life is short, there's no room to do that. So, you should follow a path that you want to be on.
100%. I mean, my biggest question I've asked a million people is like, what would you do if money didn't matter? Like, not with the money, but with the time. How would you spend your time? And I asked a lot of people in investment banking, and like none of them said banking. And in private equity, and you see like a lot of the peers that were there, they're still doing it, but I think mostly a lot of them are still just doing it because like it pays well and it's something they already understand and know. And so it just might as well stick around with it. But I have a feeling a lot of those people, when they turn 45 or 50, you're going to be like where did it all go? Like what happened? They've been doing the same thing since I was 22, and so it's just short term sighted. I think to just kind of continue down this path that's already been laid out for you, and just jumping on the next stepping stone. I would say like don't be too afraid to just try something else and think about who you are and what you're good at and what you want to try to do with your abilities. And maybe if you can, it's kind of lame, but make an impact in the world in your own way, whatever that is for you. Maybe it's making music or I don't know, starting in nonprofit, but just think about that a little bit. So many people get confused for the wrong reasons. Yeah, I'll stop there.
Oh, totally. No, it's a big world. There's a lot of options. There's no one way of doing things. So, what you do in your first stage, first 2 years, 5 years of your career doesn't have to be what you do 20 years down the line. So just stay open-minded. I think it's brilliant advice. And, it was a pleasure having this conversation with you, Michael. Thanks so much for the time and for joining us.
Same here, man. I really enjoyed it. Thanks for inviting me. And feel free, anyone who's watching, if they want to send me a note, my email is literally on my LinkedIn. It's posted on there if you just click on their contact info. Happy to help in any way I can. So yeah, just shoot me a note if it could be helpful.
Wow. What a generous offer, huge resource you are, Michael, for sure. So, appreciate the time here. And, everyone have a good one. Enjoy the weekend. Happy Friday.
All right. See you, everyone. Bye, man.
Bye.